Piper with the midweek video clip. It's Tuesday, 13th September. This is the chart of the DAX, the 4-hour chart. Before I talk about the actual market, I want to just talk about the general situation. Nothing's really changed. We are the subject of a huge financial experiment. Nobody has any idea what's going on. I don't repeat this very often. I don't want to be likened to this lady from up Pompeii, who used to wander the streets claiming the end is nigh endlessly. If you missed Up Pompeii for one reason or another, it is available on YouTube. It's quite an amusing flashback if you like that kind of thing, as is I Dream of Jeannie, in fact. Anyway, get on to more the markets. I think the situation is that, at least to summarise it, if you talk to various people who have studied this issue, you get a huge lack of consensus. Everybody says something different. In theory, if you can print money endlessly, which is what the QE situation needs to be, whilst avoiding the hyperinflation situation by keeping that money out of the hands of the populace, as it were, there's a case for saying you can buy your way out of anything. I think the caveat is you can buy yourself out of anything given the time. The problem is that if there's a shock to the system, and I think a shock is probably inevitable at some point in time, where it'll come from, I don't know. It's a black swan type event, I guess. But we're creating a situation where a shock could come from anywhere, and it could be quite a large shock. And if that shock starts to trigger situations where, for example, banking covenants aren't met, a major bank can't meet its commitments within the next 24 hours or whatever, then there may be no time to print the money to solve the problem. And given that situation, something that changes everything might have happened. Prices on the markets may get down a long way, and that's the risk. That we live in a world where things are very fast in the markets, but there are safety checks built into how much money you can print. For example, it's something you can't necessarily do it immediately. There are rules you have to follow. So I think that's the danger. The markets might hit some kind of huge snag, and it'll all be to happen so quickly that there won't be time to actually salvage a situation in an orderly fashion. I may, of course, be wrong about this. It's very difficult to get, but that seems to me to be the risk. That in theory, it all may be hunky-dory. In theory, given all the time in the world, every problem can be resolved, but markets don't give you all the time in the world. In fact, they don't give any time at all very often. And I think that's probably where the fault line lies in this huge financial experiment where we're all guinea pigs. Anyway, looking at the market today, this is the DAX. We had the peak here. Right now, it looks like an ABC. We saw a bit of a move down below here, but in a longer term basis, we didn't really see acceptance. I mean, that's 3-4 hourly bars. We bounced back up again. We filled the gap. Although this chart doesn't necessarily show that many gaps. And we're now bouncing around. Let's have a look at this in more detail. Okay, so if we look at the move, got a couple of spikes. Didn't actually go very far, but then we saw a bit of a triangle at the bottom. Break out the upside, quite a strong rally. It's fallen back today. It's hit the 20s level. 20s and 80s are key levels. I've mentioned this before. And you can build a whole trading system around this if you wanted to. Not a huge amount to go on. I think, as I say, we're in a situation where this could just fall away any second, really. If so, I'll be selling it. Right now, it's looking, it can go either way. We have got the big ABC down to here. We bounce back, which could be impulsive. I've currently just got a 1. Well, we've got a 1, 2, 3. So any move below this level here, which is around 10.4, would question a 5-wave count, but this could be a 4th wave at the moment, so indecisive right now. Right, a quick word about the S&P chart, daily chart. The S&P code is a service we run by Pitfox, in fact. I just want to make the point that the market has actually been going largely sideways for the last 2 months, and the code hasn't given many signals, which is as it ought to be given what's been seen. A bit frustrating. However, it caught this trade yesterday really well, and that's I think a sign of things to come. At least that's my expectation. It had some good trades early on as well in the initial phase, but it's been a bit lacking in trades over the last couple of months. but you can of course see why looking at this chart. Let's have a look at this in a bit more detail. Actually, I should need more detail. We've basically got this 5-wave advance, 1, 2, 3, 4, 5 into the peak. So let's look at the action since the, well, like the DAX really. We have a bit of an A, B, C down to there. That looked quite good for a rally, which failed, obviously. So it could be a B wave, that could be a C wave sell-off, but it could be started something a bit more worrying. Strong snapback, but that's failed a bit. But then again, that's nothing. So again, same as DAX really. No clear signal right now. Alright, gold. As you know, there are many different ways of looking at markets, and they're all flawed. Whatever system we use, we'll have losses in trading terms, and nothing gives us a clear 100% indication of what's coming next. So if you look at Elliott, I would say this is a 1, a 2, and a 1. And hopefully a 2 down to there. No real confirmation yet, but that's what I'm looking for. However, if you look at moving averages, and this is the 200-day moving average, then you might think, well, it's very reasonable within a bull market to get a retest of that average. So that's about 1240. So we could easily see a move down to 1240. It would fit in with the Elliott count if that's a 1. It actually doesn't count very well as a 1 because of the form of the move. Then, yeah, this could be an A, B, and a C down to there quite easily. Or perhaps the counter, maybe the count actually should be that this is actually a 1, 2, 3, 4, 5. This is a major peak, and they're actually correcting this entire rally at the moment, which is another possibility. So again, that would easily make a move down to test that average quite possible. Wouldn't change the bull market at all. Wouldn't change any larger, longer-term projections at all. It would just be slightly irritating for those of us holding positions at the moment. Back to the 4-hour chart on gold. It's a pretty good ABC really. A, B, C, A and B, sorry, A and C roughly the same length. Quite a nice little 5-wave advance here, but this sell-off is a little bit steep. So I think it's a pretty good case. I think there's a fair case that we have seen the low here. This is a 2-wave, but it's quite a sharp 2-wave, and it's looking a bit impulsive. So I think at 1320 breaks, we're going to test 1300 probably, and obviously at that point 1240 might be quite attainable. And that moving average, which of course will be moving slightly up in the process, I would expect. Key support around 1250 there as well. So I say no change of opinion. It's just a question of how long this decline goes on for. Well, looking at silver, I think the position is slightly clearer here. Position 1, 2, 3, 4, 5. That becomes quite a short 2, and then another 1, 2, 3, and this being a 4. So again, we've got a fairly clearly impulsive move, but the MA is down here. So as I said, it turns out look at markets, and there are many more ways than just Elliott and moving averages, quite obviously. Have a look at the shorter term act. Okay, this is that peak of the rally. So we have this decline, that's an A, B, C, B, 1, 2, 3, 4. So it could be very sharp, and it could easily be turned impulsive, but we have got 5 waves up here, which is encouraging to an extent. So I got an extreme stop above here. I left the extreme stops in place I mentioned a few days ago. They weren't triggered, which is one of the good things about extreme stop. You do save yourself getting involved with bad trades. Not all the time, of course. You sometimes get triggered and it goes wrong, obviously. But on the occasions, the ones I mentioned didn't get triggered. So if we have a nice ABC here decline, a clear ABC, bit of a spike would be ideal. You might get a buying opportunity around here somewhere. Otherwise, extreme stop might do it. So that's one way of trading this particular situation, I should say, if you're inclined to go long of silver at this particular point, or if the right sort of action comes in. Okay, on that note, I'll call it today. If you found that interesting and useful, back for a report on Thursday morning. Have a great day, thanks for listening, and bye for now.